On today's episode of the Cryptoverse, blocking ads without killing the publisher. Let's take a look at ADZcoin. And warning, this episode contains a rant. Dash is the privacy-focused digital currency that offers transactions with instant confirmations. Its unique, decentralized decision-making and self-funding system make it an ideal choice as a stable and secure digital cash. Click the link in the video description to learn more. Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. And just before I started recording, I got the hiccups. That's a pain in the backside. So I apologize if I pause during this episode. So let's begin with the market roundup, shall we? As ever, we turn to coinmarketcap.com for the cryptocurrency prices. We'll talk about the craziness in Bitcoin in a minute, but let's do the biggest winner and the biggest loser of the day. To be honest, in the top 20, almost everybody's up. And the biggest winner is PeerPlays. PeerPlays has gained 30% of its value in the last 24 hours, putting a PeerPlays token at $41.40. That shoots PeerPlays up to the 9th most capitalized coin in the world. Wow. And that means PeerPlays blockchain is now worth $41,395,000. Now check this out. A PeerPlays token is worth $41.40, right? The first crowdfund that they did was $2. A PeerPlays token was selling for $2 when the original crowdfund happened. So what's that? A 20 times change in the value? Pretty impressive. Now I can tell you why the price has shot up so rapidly today. It's because the trading of PeerPlays tokens is going to freeze on the 23rd, I think it is. I think it's at the end of today. And that's so that the live blockchain can be built. And at the moment, a PeerPlays token exists on the BitShares network, just while the PeerPlays blockchain is being built. And then, of course, those PeerPlays on the BitShares network will get exchanged for the real PeerPlays tokens that will be the native token on the real PeerPlays blockchain. So anyway, point being that trading has to stop at a certain point so that the snapshot can be taken and see if everyone has however many PeerPlays, and then they can be issued on the new chain. Anyway, the biggest loser of the day is Augur. One of the few losers of the day. Augur's lost 4.3% of its value, putting it down at $2.65, making the Augur blockchain worth $29,141,000. Now, I'll just mention one other coin here, altcoin, before we move on. Zcash is the 19th most capitalized coin now, and it's jumped 17.3% in the last 24 hours. That's quite a lot considering Zcash's price. Well, a Zcash token is now worth $52.85, and quite a bit of trading volume there, $3 million. I honestly can't explain why that jump is so significant. The market's obviously been spooked by something. If you happen to have any sort of tips on the Zcash situation, then please let me know. And now over to the Bitcoin chart. Well, yesterday I launched the Ledger Nano S review, which that was a pre-prepared video. I've took me 3 weeks to put that thing together, and then I decided to launch it yesterday and use that as the episode of the Cryptoverse. But that meant that we've missed a roundup of the Bitcoin price chart. Now, so 2 days ago, let me just point to this on the chart. 2 days ago was the 21st of December, right? And this candle here, if you're looking at this on YouTube, this candle right here was just forming. And it wasn't as big as this, put it that way. It had broken 800, but it was still climbing. And then it proceeded to shoot up the rest of the day, leaving the day up 4.27%. And this is Bitcoin, remember, which is a $14 billion market cap. So a 4% gain is a massive amount. And then yesterday, which I didn't do a market roundup yesterday because I put out the Ledger Nano S review, it jumped another 3.2%. And then today, before I've even started recording the damn episode, we're up another 4.9%. So we blew right through 800, we blew right through 850, through 900, and we're now sitting at $902.15 with a high of the day of $913.41. I said the other day, didn't I, that if we broke the $800 mark, it would be clear air. It's clear air. There's nothing really stopping us here. Now, I have drawn a horizontal line here to see why it stopped where it stopped, which is around 905. And the reason I've done that is because I know I said the other day that we could ignore all this craziness. But when the price stopped where it did, I wanted to know if it had any historical significance. A bit. There are two candles back from 2014, January I think that is, where the price opened and closed at the 905 price. It's only an open and close price. Back then, the highs of the day were actually higher than that. But, you know, it's not super significant. And again, we've only stopped at 905 today. So we'll see what's going on. I mean, if you look at Bitcoin Wisdom, you'll see the volume increase. And let's have a look. Coin market cap. What's it reporting in terms of volume? Yeah, $226 million worth of trading volume. 227 if you round it up. So pretty sweet. There's something in trading called overextension. So like, I mean, this Bitcoin breaks all the rules because it's pure market. There's no market manipulation like there is in the Forex market. And because the currency is so new, there's still a lot of cash to come into it. So it could just wildly break all of the rules. However, what I'm saying here is that generally, you know, I've talked about price cyclicity in the past, where you get this, I call it phase one, phase two. Phase one is where the price goes up, and phase two is where the price goes down, back to a trend line of some kind. And then it sets off again in a phase one, gets overextended from its trend line, and then goes to a phase two, comes back to its trend line. So that's why I draw the trend lines, to show the ascending average price, if you know what I mean, or the ascending floor is probably a better way to put it. So you can see the cycles, hump, 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 hump. And generally, it doesn't get too far away from the trend line before it's overextended, and it has to come back down and make sure that, you know, rebalance things. And the places where it gets overextended from are trend lines, like I've drawn here, which is this ascending floor. But also, you'll see I've got this blue line and this orange line. Those are the exponential moving averages. So they are the average. The blue line is the average of the last 50 days of the average price, of the average closing price. And then the orange line, it takes an average of the last 200 days of the closing price and then plots that as a line, right? And you can see they're both trending up, so that shows that, you know, we're definitely in an uptrend. And so my solid line here, the straight one that goes diagonally up, is also an upward trend line. So we're definitely in an uptrend, put it that way. The point I'm getting at, though, is that this big rally here, it's not really three white soldiers, but that's a pattern, by the way. It's a candlestick pattern where you have three green bars like this, big ones. It's momentum. So it's pretty much three white soldiers, but it's not quite technically accurate. The point is that the price has gone way, way overextended from these three trend lines, the diagonal one and the two exponential moving averages. So it can only go so far. It's not strictly true, but usually it doesn't go too far away before it pulls back and then touches its trend line once again. Now, to continue in an uptrend, it won't go down lower than a previous low. So like, because that would technically be a downtrend. So when it comes back down, it won't ever go as low as it was, right? So you like this hump here, phase one, phase two, that low there, 744, it would never go below that, because if it did, that would break the uptrend and then it would possibly be a downtrend. So yeah, I'm expecting at some point, maybe this 905 is the ceiling and it'll start pulling back to the trend line to test it again. So in terms of the news today, I've turned to the Coin Telegraph once again. And this article is entitled, "In the Ad-Blocking, Anti-Blocking Chase, Redistributing Rewards Can Make Customers and Advertisers Happy." Well, that's the claim. But let's see what it says and what I've got to say about this. This is the rant portion of the episode that I mentioned, so here we go. Now, before I begin, I must use one swear word, so please mute for the next 10 seconds if you don't wish to hear me say it. So here goes. This issue really pisses me off, and here's why. If I put out a piece of free content, you know I can't afford to work for free. You know the advertiser is paying me on your behalf, yet you run an ad blocker anyway. So you mean you value the content enough to want to consume it, but you don't want to pay for it in any way, shape, or form. Now that has to be the most sickening attitude of entitlement that I've ever come across. Now you know me, I'm all for integrity, and I'm dead against hypocrisy. So I hold myself to the same standards that I expect of others. Now I subscribe to a bunch of YouTube channels, and every time I watch one of their videos, I let the advert run for at least 35 seconds, which is the point at which I know YouTube will pay the content creator. Because if you skip an ad after less than 30 seconds, then the advertiser doesn't get charged and the content creator doesn't get paid. So rather than paying for the content myself, I will let the ad run for 35 seconds to guarantee that that content creator is paid to create the content that I'm going to consume, right? Now, if I come across a random video from someone that I'm not subscribed to, I'll skip the ad the first time because I don't know if their content's any good. And if it is good, I subscribe, and then on subsequent times I watch their videos, I'll watch their ads, and then they'll start getting paid for my attention, right? Now, my point is that if you remove the incentive for me to create content for you, I'm talking now as Chris of the Cryptoverse, then there will come a point when I will stop doing it, right? We're in the cryptocurrency space. The whole thing is based around economic incentives. Whatever you reward, you get more of. Whatever you punish, you get less of. For example, how would you like it if your employer clicked the skip button on your payroll next month? Think about that. Now, fortunately for you right now, the Dash network is picking up the tab here, so I'd suggest if you want to show some gratitude, go over to the Dash forum and make a post on there thanking the masternodes, because trust me, the income from the YouTube ads on the Cryptoverse is chicken feed. But anyway, let's look at the actual article, shall we? Now I've kind of set the scene. So the first thing I noticed was the thumbnail on the Cointelegraph. It has this little thing in the bottom right hand corner of it that says sponsored. So that thumbnail says sponsored, meaning a company has paid the Cointelegraph to publish this article on their site. So it's effectively one big advert. And this is technically known as an advertorial, which is the words advert and editorial mixed together, right? Advertorial. It's a well-established medium of advertising in the marketing world. So thanks to the company that's behind this article, they are providing some funding for all the other free articles on the Cointelegraph. So the article is quite long, but I've only highlighted a few pertinent bits, and then I'll give you the summary of what this thing is about. So this paragraph is headed up by saying, $22 billion question. Every year publishers lose billions of dollars because we get annoyed by advertisements and we dare to install an ad blocking software. For instance, in the year 2015 alone, ad blockers have caused a loss of $22 billion for web publishers. This number keeps on rising as ad blocking is going mainstream all over the world. So that means the group of people who are using ad blockers are basically stealing $22 billion worth of content every year. Now that's money that those content creators might have spent with your company and caused you to get a pay rise. Some of that money may have ended up invested in Bitcoin and helped to rid the world of financial tyranny. But in any case, my point is, if you don't think the content is valuable enough to pay for, then why are you consuming it? If you say, well, it's kind of valuable enough for me to consume, but I don't want to pay for it, well, there's the hypocrisy right there. Because if I clicked skip on your payroll, would you continue to go to work? Of course not, right? That's the hypocrisy right there. So why do you expect content creators to do it for free? Anyway, onto the orange bit. It says here, ADZBuzz, which is this platform they're talking about, suggests creating an ad blocker along with a script that publishers can install on their websites to be able to identify if visitors are blocking their ads or not, right? And then the script tracks the amount of visitors and calculates the amount of revenue for a publisher. So the way I understand that is you install this ADZBuzz software and it counts how much content you steal and it adds up the lost advertising revenue, right? Then they intend to build this product search engine, which pays content creators when people buy products through it. And that way people are not being interrupted by ads for products they're not interested in, right? They instead go to the product search engine when and only when they want something specific. And that's the thing that people bug out about when it comes to advertising. They're like, well, if I want to buy something, I'll go to a search engine and type it in, right? So that's why they want rid of the ads. So this company is like, okay, fine. Well, let's let you block the ads, but let us detect when you are blocking the ads so that we can pay the publishers and the content creators backstage, as it were. So you get the idea behind this, right? This idea in this article is actually behind the ADZcoin. So if you come across that on CoinMarketCap, this is what they're talking about. Now, I'll be honest, I don't think this is going to work. And having read this article, there's absolutely no way that I'm investing in any ad coins. This model is just too weak in my opinion, and it isn't really providing any innovation, and I'll explain why. So this product search engine that they want to build, that already exists. One of them is called Amazon, one of them is called eBay, another one is called Google Shopping, and they all have advertising platforms built in. How is ADZBuzz, how is their product search engine ever going to compete with these platforms that have hundreds of millions of dollars invested in them and decades of development, right? It's just a flawed idea. So my money is on what Brave have come up with. You know, yesterday I was talking about being solution focused. Not yesterday, that was the Ledger review. Day before that, I was always saying that the news tells you what the problem is and then leaves you there without giving a solution. And I claimed to be solution focused. So here we go. If I'm going to criticize this ADZBuzz model, I need to provide a superior alternative. This is the superior alternative. It's brave.com. If you're new to the Cryptoverse and haven't heard me talk about this yet, then definitely check out brave.com. So this is a web browser that's going to block ads on web pages and then replace those ads with advertisers who are willing to pay part of the advertising fee to people who view the ads. So in this case, that would be you. So this is a win-win for you because it means you'll be earning Bitcoin as compensation for the inconvenience of having ads appear on sites that you visit. So as long as you're using the Brave browser, if an ad appears on a web page, boom, a little piece of Bitcoin will arrive in your Brave wallet, which is built into the browser. So not only will you be able to consume the content for free, you'll actually be earning Bitcoin from it. Now that is an innovative model right there. Completely never anything like it been done before. Now in this case, advertisers win, users win, and the websites win because Brave also has an automated tipping system built into it. So you can fund your Brave Bitcoin wallet with, say, $5 a month, and then Brave will automatically distribute that across all the free content that you consumed in that month. Pretty sweet if you ask me. So let me conclude this episode with an important point that I haven't actually mentioned yet. In a couple of episodes this week, I've talked about how we don't know what we don't know. Right? Another way to say that is that there are many things outside of our individual awareness. And things that are outside of our individual awareness may as well not exist from our point of view. Now, many of those things may be of huge benefit to you and your life. In fact, I would argue that there's a solution out there to almost every single one of your problems. It's simply that you are not aware of them. So, how are you ever going to go to a search engine and search for a solution you don't even know exists? You're not going to do that, right? So somehow, something needs to interrupt you and make you aware of something you were previously not aware of. And that, my friends, is the value of advertising. Now, as long as the advertising is targeted correctly and relevantly, advertising is actually doing the world a great service. It's going to people with problems and making them aware of a solution to their problems that they may never have been aware of if it wasn't for seeing that ad. Now, does this happen in every case? No, of course not. But the law of averages states that if you do something often enough, a ratio will appear. So one day, you'll see a billboard or a YouTube ad for a product or service that might actually change your life. And if you're running an ad blocker, you'll miss it. So thanks for joining me today, guys. If you like this episode, hit the like button. If you dislike this episode, hit the dislike button. Please leave me a comment below with some feedback and get subscribed. And please support the Cryptoverse and boost cryptocurrency adoption by going to cryptoversity.com/podcast and becoming a patron. From as little as $10 a month, you can secure Cryptoversity's future, get unlimited access to all Cryptoversity courses, and access a private patrons-only chat group where you get direct access to me. Who knows, if I get enough patrons, I'll be able to do away with all advertising and then you'll be able to consume it for free. But that's all for today, guys. I'll be back on Monday with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.